Hi, I'm Cedric Stewart, team leader and Entourage RG of Keller Williams Capital Properties. And I once again have the pleasure of speaking with Kim Cox of Apex Home Loans. In this video, we are going to talk about something that is extremely controversial. And I'm probably going to learn something here. This is about credit utilization. So, Kim, because you work in the loan dynamic, you see credit scores, you see the applications, you see these things pretty much all day. I thought it would be good to talk to you about this.
Okay,
So
great.
what can you tell us?
Great. So one of the quick and easy ways to boost your credit or to make sure that you are maximizing your credit score is to keep your utilization below 50%, ideally below 30%. That would be even better. But when you keep it lower, you can boost that credit score by quite a few points if you do it that way.
Now, you talk about the percentage. I have heard a lot of speculation out here. I have heard 30% is definitely, really good. Some people say 10. I've even heard 7. Don't really hang on to that because, I mean, that's pretty low. But is it safe to say 30% or lower?
30% or lower would be great. Really, I see the best improvement in people's credit scores when they keep it below 30%, but keeping it below 50% can make a dramatic impact on people's credit scores. When you max out your credit, you really impact the credit scoring, and it definitely can reduce the credit score that you'd like. And really the best pricing is you want to get into the 700s, ideally 760 or higher.
Credit score.
Credit score, okay. Yes. And just one other thing that I don't know if people know, but we look at the three bureaus,
right,
and we take the middle score of the 3 bureaus when we're calculating your mortgage qualifications.
Right. Now, when we talk about how to properly do this, I know when we were talking the other day, you mentioned that when people are getting ready to purchase and getting ready to get qualified, they think that it's good practice to pay off all the cards and just use one, right, to kind of streamline things. And you were saying that's not necessarily the right way to go about it.
Right. You don't always get that improvement on your credit score when you do it that way. And then you don't have your cash to close, which is critical. Sometimes it's better, and instead of putting that money on your credit cards, to have that money to put down on your house,
right,
for the purchase. So I would recommend talking to your lender beforehand when you're evaluating what you should do. If you want to improve your credit score, start early, prepare ahead, and have your credit pulled so that they can evaluate what the best options are for you.
Now, in talking about this, tell me what you think of this example. So you have 3 cards, and each of them has a $1,000 limit, right? Now people are like, okay, I want to make sure that everything is looking real clean, so I'm going to pay off these 2. I'm only going to use this one. But you have $900 worth of expenses every month, right? So you put all $900 on the $1,000 limit card. That brings your utilization rate to 90%.
Exactly.
Whereas instead, you should take $300 and spread it amongst the 3 cards, 30% across the board.
Yes, ideally, because then you can, when you bump up that utilization, you're going to get that hit on your credit score.
Right.
So yes, it would definitely be better under those circumstances to spread that money amongst your credit cards if your utilization is above that 30 or 50% threshold.
Yeah. Again, just a rough example, but I don't, because I've seen it a lot. When you work with first-time home buyers, the people that are just kind of getting themselves ready, and they read different things online. But again, you look at the applications, you see the scores and everything, and you know what the underwriter's looking for. You know what the banks are willing to work with or not. So
one other thing that I've heard recently is I had a question recently about whether you should cancel old credit cards.
Oh.
Yes, history, the length of your history impacts your credit score. So you definitely want to hang on to those old credit cards. Even if you're not using them,
right,
it's better to hold on to those for your credit score improvement or to maintain that high credit score.
Okay, so I know a little something about this.
Okay.
So I got like a bonus tip here. And do your research, don't just take me at my word. So when you have that old card, let's say if it's one of these, mileage kind of points related kind of cards, where you get all the benefits and everything, they typically come with an annual fee. Could be $99 to $500, $99 to $500. And if you decide you're not using that card anymore, then what you can do instead of canceling it, you can do what's called a product change. So same card, right? Not a cancellation. Switches you to a different type of card.
I love it. I've never heard of that, but that's a great idea.
This has been a big part of my world lately. I'm looking to get a whole bunch of trips and that I don't have to pay for. So I'm just really intrigued by the miles game right now. Yeah, so the product change. Call the bank. I've done it once. Call them, let them know what you're thinking about, and they want to keep you. So they're willing to work with you. They don't want you to cancel. And I think basically
we don't want you to cancel.
And nobody wants you to cancel.
Doesn't improve your credit
right?
score.
So
Yes.
whatever you do, if you take nothing else away from this video, don't cancel the cards. Yeah, so that's something.
Yeah.
All right. So how early should people begin this process? And when should they be talking to someone like yourself when they have to rein in these cards and deal with all these credit related issues?
Well, if you've checked with one of the online credit scoring models, Credit Karma, and you've got your score and you know that you're in the sixes and you need to you want to buy a house in the future, it's best to start early. So maybe 6 months ahead of time, start talking to a lender, have them run your credit, discuss what you can do. I mean, I have a rescoring tool that I can use and improve people's scores sometimes by quite a bit. If you have some more serious issues, I can refer you to a credit management person that can improve your credit score more. But the more time we have to work with it, the more chances that we can increase that score.
Well, yeah, 6 months is, it's the kind of time frame that allows you to kind of ease your way into it, not feel a lot of anxiety and stress, have to make sacrifices with your bills, so on and so forth. So that makes a lot of sense.
Yeah, if your credit score is in the sevens when you run it through, Credit Karma, then you're probably fine to start at the traditional time frame between 4 and 2 months before you decide to buy.
Okay, all right. Well, as I said, I learned something here. If there's anything that we haven't covered, any question that you have that wasn't discussed here, please feel free to reach out to us. You should be able to find our information somewhere around here at the bottom. Thank you so much.
Thank you, Cedric.
This has been incredible.
Thank you.